Hello everybody, it's Zach here from realestatelicensewizard.com. How's it going today? Hopefully pretty fantastic. Today we're doing part 2 of our 2023 real estate practice exam video series. This is for the national portion of your real estate exam, which means, yes guys, it's good in all 50 states, Florida, California, Pennsylvania, Colorado, it all applies. Now a couple things I want to go over before we get started. This is part 2. If you haven't watched part 1, the first half of this video series, I highly encourage that you do, because I'm going to be referencing things in this video that we covered in that first video. Secondly, check out our website, realestatelicensewizard.com. Not only do we offer a completely free version of the exam, like the one I'm covering today, but we also have completely free state-specific practice exams to ensure you feel confident and prepared on exam day. And if you really want to help out this channel, you can check out one of our premium prep packages. Anyways, without further ado, let's get started. All right, so question 51. Which of the following would not apply to the income approach in the valuation process? And it gives us 4 options. A, depreciation, B, capitalization, C, the gross income multiplier, or D, the gross rent multiplier. So like always, I'm going to give you guys an opportunity to pause here, reread it, all that good stuff, and come up with your answer. So go ahead and do that right now. All right, so hopefully you came up with your answer and hopefully it's correct. If you need time throughout this series, feel free to pause. You can also speed up or slow the time. YouTube has that feature as well. I like to mention that in case you guys want to adjust things. Anyways, so what is the correct answer for this one? Well, it's going to be A. That's right, depreciation. Depreciation. Only the cost approach valuation process uses depreciation. And that makes sense, right? Because remember, if you're familiar with the cost approach, you should be, kind of how it's derived and how the value is derived or created or found, really depends on the key concept of depreciation. When we're talking about the income approach, that's really not applied at all. The main focus there is obviously the income and how that associates and derives the value for that property there. All right, next one. 52. What type of ownership model is used for vacation real estate in which multiple purchasers own allotments of usage, typically 1-week increments for the same property? Is it A, condo, B, timeshare, C, condominium, or D, ownership and severalty? So take a moment to think that one over and come up with your answer. Alrighty, so for this one, our answer is B. That's right, timeshare. So a timeshare is a property divided form of ownership use of rights, where these properties are typically resort building units. But the big thing is it's allotted per time. They differ from regular condominiums as they typically are exclusively for vacations and things like that. All right, next one, 53. An individual seeking to be excused from the requirements of a zoning ordinance needs A, and it gives us 4 options. A, variance, B, building permit, C, certificate of exclusion, or D, certificate of alternative usage. So take a moment, think that one over, and come up with your answer. Alrighty, so an individual seeking to be excused from requirements of a zoning ordinance needs A, and the correct answer is variance. A, variance. So an individual seeking to be excused from requirements of zoning ordinance needs a variance. A variance is a request to deviate from current zoning requirements. If granted, it permits the owner to use his or her land in a way that is ordinarily not permitted by the zoning ordinance. An example would be, let's say you were in a residential neighborhood and you wanted to, let's say maybe open up a golf course. Typically, that's not zoned properly, so you'd need to get a variance to create the golf course to make sure that it would be following the code, essentially. Pretty straightforward, but again, it's one of those things that you just need to be familiar with when we're talking about zoning. All right, question 54. Josh agrees to represent Susan in the sale of her home. The listing contract states that Josh will receive a fee of $15,000 from Susan at closing. Regardless of the sales price, is this a legal and a valid form of compensation? It gives us 4 options. A, no, flat fees are illegal. B, no, the fee has to be given before closing, otherwise it's voided. C, yes, since the fee is lower than the United States regulated minimum, it is legal. Or D, yes, compensation can be determined in different ways as long as the seller and broker agree. Alrighty, take a second moment, time to figure it out. Alrighty, what is the correct answer for this one? Well, it is D. That's right. Yes, compensation can be determined in different ways. Compensation is negotiated between the broker and the seller and may be transferred and distributed in a variety of ways. As long as the seller and broker agree to compensation, no matter how much, when, or really any avenue, it is legal. Alrighty, next one, 55. During your time as an agent, you will run into many different types of people from across the world. Closing is called many names depending on which region of the US you are from. Which of the following is not a legal name for closing? Alrighty, there's 4 options. A, settlement and transfer. B, exchange and transfer. C, passing papers. Or D, closing. So take a couple moments to think that one over and come up with your answer. Alrighty, the correct answer for this one is B, exchange and transfer. So yeah, guys, this is one of those ones that's super important because you need to be aware of all the different types of terms or phrases that associate with a similar word, and this is one of those instances. So obviously closing is known by tons of different names. The textbook name obviously is closing. However, things like exchange and transfer is not that wouldn't be the case. However, settlement and transfer and passing the papers, those are some terms that are associated with that. So keep that in mind. All right, next one, 56. An example of an antitrust violation is A, selling more than 100 houses in a taxable year. B, buying a house in another state. C, an equity loan. Or D, price fixing. So take a moment to think that one over. Alrighty, so what's the answer for this one? Well, it is D, price fixing. So we did talk about that a little bit, I think, in the first video, just those antitrust violations. But fixing is the practice of setting the price of a good or service to make a particular price a standard. So in our terms, real estate fixing is when competing agents meet up and agree to the same commission rates. Any agreement, even if it's just implied, again, is a violation of antitrust laws. So you need to be aware of that. All right, 57. An agent took a listing and later discovered that her client had previously been declared incompetent by the court. The listing is now A, unaffected because the agent was acting as good faith as the owner's agent. B, unaffected because her client took the listing, making it a verbal contract. C, of no value to the agent because the contract is void. Or D, renegotiable by both parties. So take a moment to think that one over, come with your answer. Alrighty, what's the correct answer for this one? So what is this listing? Well, this listing is of no value to the agent because the contract is void. So remember, guys, in order for a contract to be valid, the party must be at least 18 years or older and of sound mind. Obviously, the contract must be legal. For example, there can't be a contract to kill or steal or do anything illegal. And then, of course, the contract must hold a clear and definite consideration. And then obviously, yeah, mutual consent. So for this instance, since the client has been declared incompetent by the court, the listing is now void. So again, that is void. C is our answer. All right, question 58. Which of the following contracts would be best described as a contract in which only one party makes a promise to perform an action? A, implied contract, B, bilateral contract, C, unilateral contract, or D, an implied in fact contract. So take a moment to think about that one and come up with your answer. Alrighty, so what is the correct answer for this one? Well, it's going to be C, unilateral. A unilateral contract is a contract in which only one party makes a promise to perform an action. An insurance contract, a reward contract, those are both examples of unilateral contracts. Unilateral contracts appear more often than you may think. One of the most common instances is a reward contract. Imagine you've lost your cat, Coco. You place an advertising online offering a $250 reward to the person who returns Coco. By providing a reward, you're offering a unilateral contract. So for this one, key hint there is just, again, one party. When you're reading these ones, see it says one party, whereas the bilateral is two or more. That's the best way to remember them. All right, next one, 59. Under a lease for a commercial property, a tenant agrees to pay $3,000 per month plus $4,000 of the gross monthly sales. This type of lease is called A, and it gives us four options: A, single net lease, B, double net lease, C, triple net lease, or D, a percentage lease. So take some time to think about that one and come with your answer. Alrighty, what is the correct answer for that one? D, percentage lease is our correct answer. So that is when which all or part of the rental is specified percentage of the gross income from the total sales made upon the property is included in that lease agreement. So pretty straightforward. Again, just look at the percentage. You should be able to put it together that it's a percentage lease. All right, question 60. Mrs. Thompson hired a broker to find her a 100-unit apartment complex for sale. Upon finding one she liked, she made an offer for $2.5 million to include all the personal property as well. In order to include all the personal property, Mrs. Thompson needs A/N, gives us four options: A, an investment unit loan, B, an amortized loan, C, a package loan, or D, a balloon loan. So take your time to come up with your answer on this one. Alrighty, so Mrs. Thompson, what does she need? She needs a C, package loan. So since the offer includes all the personal property as well, Mrs. Thompson is required to do a package loan. A package loan is a real estate loan used to finance the purchase of both real and personal property, such as in the purchase of a fully furnished condominium. So if they want all the furniture, they would want a package loan. All right, next one, 61. What is the proper procedure for changing a contract that already has become binding? Is it A, sign a separate amendment, B, replace the old contract with a new one, C, write the changes in the original contract, D, write the changes in the original contract, date and initial the changes? So take a moment to think that one over, come with your answer. Alrighty, so do you guys know your contract procedures? What is the correct answer for this one? So, I'll read it again. What is the proper procedure for changing a contract that has already become binding? So, the correct answer for this one is A. Sign a separate amendment. The proper procedure for changing a contract that has already become binding is to sign a separate amendment. Remember, separate amendments are used to modify or change executory contracts. Executory contracts means they are already a contract, they're signed, they're executed, or they're in the process of being. I guess that would fit in both boxes for this example. But the point is, again, this kind of gives us, if you read this, this kind of gives us the answer. What is the proper procedure for changing a contract that's already has become binding? That's the hint there, because it's already binding. We wouldn't want to replace the old contract. That's not necessary. And again, we can't change the contract because it's already become binding. So we can't do these changes like that. So we would need a separate amendment in that case. All right. 62. When a home is purchased using an adjustable rate mortgage or ARM, the monthly loan payment on the mortgage will, and there's 4 options. A, be adjusted automatically to ensure that profitability occurs. B, rise slightly in each adjustment period until the cap is reached. C, be based on a very low interest rate, but will rise to the market rate at the first adjustment. Or D, vary over the time of the loan, depending on fluctuations in the interest rate to which the loan is referenced. So take a moment to think about this one and come up with your answer. All right, hopefully you guys are familiar with adjustable rate mortgages. So for the correct answer for this one, it's going to be D. That's right, D. Vary over the time of the loan depending on fluctuations in the interest rate to which the loan is referenced. So when a home is purchased using an adjustable rate mortgage, the monthly loan payment on the mortgage will vary over the time depending on the interest rate. So a variable rate mortgage, adjustable rate mortgage, or tracker mortgage is a mortgage loan with the interest rate on the note periodically adjusted based on an index which reflects the cost to the lender borrowing on the credit's mark. So pretty much, if you ever see these adjustable rate mortgages or any question that pertains to that on the exam, you just need to remember that it's not your standard mortgage. These interest rates vary and they're going to fluctuate. They're going to adjust unless the market is like, in a strange time, like 98% of the time, these interest rates are going to adjust. So keep that in mind. And again, this is just one of those ones where you need to be familiar through and through with mortgages and things like that. So hopefully you got that. All right, question 63. Which of the following real estate contract clauses is typically seen in blanket mortgages and allows for the freeing of all or part of the property from a claim through a proportional or full amount of the mortgage being paid off? A, the release clause. B, the defeasance clause. C, the alienation clause. Or D, the prepayment penalty clause. So take some time to think about this one. Alrighty. So what is the correct answer for this one? Well, it is going to be A, the release clause. The release clause is a contract provision, typically in a blanket mortgage, that allows for the freeing of all or part of a property from a claim through a proportional or full amount of the mortgage being paid off. When you guys see this here, when you guys see blanket mortgage, I want you to think release clause. These things go hand in hand. They're pretty much always associated with each other. It's a great way of remembering that. So again, blanket mortgage, release clause. Blanket mortgage, release clause. All right, next one, 64. Restrictive covenants are also known as, gives us 4 options. A, deed restrictions, B, CCRs, C, bonds, or D, CDOs. So take some time to think about this one and come up with your answer. Alrighty, so restrictive covenants are also known as what? The correct answer is B, CCRs. So CCR stands for conditions, covenants, and restrictions. The main purpose of a CCR is to maintain the look and feel of a community. CCRs limit the use of a particular property, condominium, or subdivision. Such restrictions are either written in the deeds to the property or into the bylaws for the subdivision, which the deeds will reference. In real estate transactions, restrictive covenants are binding legal obligations written to the deed of a property by the seller. So pretty much you just need to be familiar with restrictive covenants as well as, its other names, CCRs. Pretty straightforward there. All right, 65. A property owner enters into a listing agreement with an agent. Another agent obtains a buyer for the house, and the first agent does not receive a commission. The listing agreement between the first agent and the property owner was probably A, an open listing, B, a closed listing, C, an exclusive agency listing, or D, an exclusive right to sell listing. So take some time to think about this one and come with your answer. Alrighty, so what is the correct answer for this one? Well, it's going to be A, an open listing. Open listings are truly open. Sellers might consider an open listing if there are a lot of buyers in the marketplace. An open listing is when an agent or broker can participate in the listing and is entitled to a commission if they produce the sale. Since the listing agreement between the first agent wasn't met, it had to be an open listing because another agent obtained a buyer. So again, these are just listings. Got to be aware of the different listing types and how they operate. All right, 66. Which of the following enforces all federal environmental rules and regulations? A, CERCLA, B, SARA, C, SDWA, or D, EPA? So think that one over. Alrighty. So when you think of all, enforces all for these, environmental related laws and acts, think of EPA. When you think of everything, that's the EPA because that is the federal agency that deals with these environmental issues. The EPA was established in 1970 by an executive order of President Richard Nixon, and the agency enforces all federal environmental rules and regulations. All right, 67. Which of the following best describes a balloon payment? A, a package mortgage. B, a small monthly payment. C, a variable mortgage cost. Or D, a large payment during the term or at the end of the payment schedule. So think that one over. All right, so in this one, we're talking about D, a large payment during the term or at the end of the payment schedule. That would describe a balloon payment. it's pretty much the definition there. Not really too much to explain, so I'm just going to move on. But yeah, you got to be familiar with balloon loans and balloon payments. All right, next one, 68. When you borrow money to buy real estate, you give the lender a blank against the property. A, tax lien. B, mortgage lien. C, judgment lien. Or D, deed. So take a moment to think that one over. Alrighty, so what is the correct answer for this one? Well, it's going to be B. That's right, a mortgage lien. When you borrow money to buy real estate, you give the lender a mortgage lien against the property. A mortgage lien is a voluntary specific lien. In fact, obviously, it's the most common type of voluntary real estate lien. All right, next one, 69. Title III of the Americans with Disability Act impacts which type of property? A, residential. B, industrial. C, privately owned housing. Or D, commercial and public accommodations. So think that one over and come up with your answer. Alrighty, so Title III of the Americans with Disability Act, what does that have to deal with? D, commercial and public accommodation. Title III prohibits discrimination on the basis of disability in the activities of places of public accommodations. Public accommodations are businesses that are generally open to the public, such as restaurants, theaters, schools, and it also prohibits discrimination for commercial facilities like privately owned non-residential facilities such as factories, warehouses, office buildings. Point being, Title III impacts commercial and public accommodation and makes sure they comply with ADA standards. So it's not just one or the other, it's commercial and public accommodations. All right, question 70. Which of the following would not be covered under a builder's new home warranty? A, public workmanship. B, disheveled masonry. C, dysfunctional carpentry. Or D, structural damage caused by flooding. So take a moment to think that one over. Alrighty, so when we're talking what's not covered with these builders' new home warranties, we would say D, structural damage caused by flooding. Why? Well, weather-related issues and normal wear and tear are generally not included in a home warranty. Other items that a builder's home warranty may not cover would be household appliances, defects resulting from work conducted by the homeowner. No warranty covers damages caused by natural disasters. So again, when we're looking at these, just need to be familiar with the style, the type of warranty, home warranty, even homeowners insurance, things like that. You just need to be aware of it, how it operates, the exemptions, to these things. And obviously, when we see caused by flooding, we know, obviously there is such thing as flood insurance. But again, when we're talking about no home warranty, that's not going to be the case, because you can't buy a house and just be like, oh yeah, by the way, I want to be protected by this, from past instances. Like, that just doesn't exist. So, all right, next one, question 71. A contract that legally binds two or more parties together to specific obligations that create a legally binding contract between the buyer and the seller. A, equity agreement, B, escrow agreement, C, purchase agreement, or D, settlement and transfer agreement. So think about that one and come up with your answer. All right, for this one, the correct answer is C, purchase agreement. Purchase agreement is a contract that legally binds two or more parties together to specific obligations that create a legally binding contract between the buyer and the seller. Plain terms, purchase agreement is the document buyers and sellers sign with all the terms and conditions of their transaction on it. So you might be thinking, why is this not a bilateral contract? Why isn't that an option? Well, technically, this is a bilateral contract, but again, it's including the second part, contract between buyer and the seller. We know that. We see that here. We know it has to be a purchase agreement. Next one, 72. According to the do not call list and established business relationship rules, how many months does a company have to call the customer if they made an inquiry with the company? Is it A, 18 months, B, 6 months, C, 3 months, or D, indefinitely? So take a moment to come up with your answer on this one. Alrighty, so the do not call list or the established business relationship rules. Remember, in the first video, we talked a little bit about this. So you need to be aware of these months, these specific how long it takes. And for this one, if a customer made an inquiry with a company, that would be 3 months. So if you remember, the first one was indefinitely when we were talking about if you had a previous business relationship or they were one of your clients, obviously it's indefinitely. Here, it's going to be 3 months. So established business relationship means a relationship between a seller and a consumer. The consumer's inquiry or application regarding a product or service would be 3 months. So again, this one's 3 months. If they're your previous client, that's indefinitely, and then there is one for 18 months and 6 months as well, and we might discuss those a little bit later. Stay tuned for that, if not. All right, next one. 73. The fact that land has a number of important uses is the basis for what essential element of value? A, demand, B, utility, C, scarcity, D, transferability. So take a moment to think that one over and come up with your answer. Alrighty, so 73. What is the correct answer for 73? Well, a number of important uses is the basis for B, utility. That's right, utility. Not scarcity, not transferability, not demand. It is utility. Remember dust and your essential elements of value. Demand means the desire to buy and ability to pay. Utility, again, kind of what we're talking about here, or it is what we're talking about here. This item satisfies a human need or desire, such as shelter, income, recreation. Scarcity, limited in supply. Supply diminishes, value increases. We've talked about that. Scarcity is something that we've talked about numerous times on this channel. It's super important to understand. But really, again, all of these, including the last one I didn't mention yet, but transferability. So again, you need to remember DUST, which I'll say one more time is demand, utility, scarcity, and then, of course, transferability. Alrighty. Next one, 74. What is the total quantity that buyers are willing to buy at a given time at certain prices? A, price, B, supply, C, demand, or D, buyer's total. So take some time, think that one over. Alrighty, 74. What is the answer to 74? What is the total quantity that buyers are willing to buy at a given time at certain prices? That is C, demand. Demand is the economic principle referring to a consumer's desire to purchase goods and services and willingness to pay a price for a specific good or service, holding all other factors constant. Also in Latin, ceteris paribus, probably butchering the pronunciation and I apologize, but that just means holding all other factors constant. So essentially, again, that is what demand is. It is when the buyers are willing, they're willing to buy something at a given time, certain prices. That would be demand. Next one, 75. A property owner wishes to build a neighborhood grocery store in an area zoned for residential use. Which of the following would most likely be used to obtain permission to build the store? Is it A, a novation, B, an amendment, C, approval of surrounding property owners, or D, a conditional use permit or zoning variance? So take a moment to think about this one and come with your answer. All right, we talked a little bit about this one already. We had a question that was a bit similar, so I'm not going to really get too much into this, but the correct answer for this one is going to be D, a conditional use permit or zoning variance. So again, once you want to be excused from these requirements of zoning, you need a zoning variance. Essentially, you need that to pretty much, do what you want to do. So again, I'm not going to explain too much into that because we already talked about that. But next one, 76. Which business structure traditionally features a board of directors? Is it A, partnership, B, sole proprietorship, C, cooperative, or D, corporation? So take some time and think about that one. Alrighty, so business structures, super important. You need to be aware of all of them for the exam. Business structure traditionally featuring a board of directors. When you hear board of directors, we know it's D, corporation. So again, it could be formed, for profit, nonprofit. But the big thing that you need to know is, again, that they are, what is that? What is a corporation? And obviously if they can own property and things like that. But because a corporation is a legal entity, it can purchase property. Super, super important to know. All right, next one. 77. Typically, a trust is a blank party relationship. A1, B2, C3, D4. So take some time, think about that one, come with your answer. Alrighty, so when we're talking about trusts, what do we need to know? Well, they are a 3. So letter C is our answer. C3. 3 is our answer. Trusts can be typically, or are created during an individual's lifetime, and they can be established following someone's death. It doesn't really matter there. But what does matter is they are a 3-party relationship in which the first party, trustor or settlor, transfers a property under the second party for the benefits of the third party, the beneficiary. So again, just need to be aware that each trust has 3 parties. It's a 3-party relationship, and obviously you need to be aware of which is which. All right, 78. Which of the following are the main participants in real estate markets? A. Users, owners, renters, developers, renovators, and facilitators. Ooh, excuse me. Sorry, I'm gonna have a little drink of water in between this question because after going through all these questions, it gets a little bit too much. But anyways, all right. B. Players, buyers, sellers, renovators, and facilitators. C. Buyers, sellers, investors, and facilitators. Or D. Buyers, sellers, and investors. So which of the following are the main participants in real estate markets? So which one of those are the main participants? Go ahead and think that one over, and I'm going to get a drink of water. Alrighty, so the correct answer for this one, the main participants in real estate markets, is A. Users, owners, renters, developers, renovators, and facilitators. You just need to know that. You need to know that they're the main participants, and obviously you need to be able to distinguish which is which we might talk about later. If not, we do have more videos and articles on that as well. All right, next one, 79. Which of the following is a private land use control? A. Zoning, B. Building codes, C. Deed restrictions, or D. Taxation. So think about that one and come up with your answer. Alrighty, so when you see private land use control, you know that's going to be C. That's right, deed restrictions. So the primary public land use control is zoning, which we did talk about, I believe, in the first half of this big exam in the first video. And then the second, or the private land use control is obviously deed restrictions. So there's public and then private, and you need to be able to distinguish which is which, and then obviously, which the following that they have essentially. So, all right, next one, 80. Traditionally, real estate agents are paid through a fee for performing a transaction called and there's A, wage, B, salary, C, commission, or D, earnest deposit. So take a couple seconds to think that one over. All right, what's going on with question 80? So traditionally, real estate agents are paid through a fee for performing a transaction called and that's going to be C, commission. Don't overthink this one. Pretty straightforward. I see so many people mess this one up. They think it's earnest deposit. But again, guys, that's different. The earnest deposit is just, that first chunk, the promise to purchase property that the buyer gives the seller as an earnest to show their trust that they're willing to purchase that property. That has nothing to do with the commission that is being paid out. So just keep that in mind. Those are completely separate things. All right, next one, 81. A lender's refusal to lend money to potential homeowners attempting to purchase property located in predominantly minority neighborhoods is, and it gives us 4 options: A, steering, B, redlining, C, price fixing, or D, blockbusting. So think about that one and come up with your answer. Alrighty, so when you see lender's refusal, you want to narrow these down a little bit, and our correct answer for this one is B, redlining. So, why is it redlining? Well, lender's refusal to lend money to potential homeowners attempting to purchase property in a minority neighborhood is redlining. Now, steering is the illegal practice of channeling home seekers to particular areas, and essentially that is a form of redlining. It's worth mentioning that because people often get these two confused. Steering is a form of redlining, and they are not exactly the same thing. So again, I'm sure you guys have heard the story hundreds of times. If not, we do have videos and articles on this. But again, the story goes, back in the day, these banks, they would literally take a map and they would just write red lines, and they would say, okay, this area we're not going to lend money to the people that are trying to purchase a home in that area. And again, it was predominantly minority neighborhoods. So that is redlining. And again, it's one of those, fair housing violations that you need to be aware of, fair housing, fair lending, that you need to just, be aware of. All right, 82. The 5th and 14th Amendments of the U.S. Constitution permit the government to exercise its power of eminent domain. Eminent domain is commonly used for A, infrastructure, B, property tax deflation, C, financing loans, in parentheses, mortgages, D, development of privately owned property. So take a couple moments to think about that one. All right, when we think of eminent domain, what do we think of? We need to be thinking of A, infrastructure. Eminent domain is a term to describe the right of the government to take over privately owned real estate, usually despite the owner's wishes. This often happens for land that is required for infrastructure like highways, pipelines, railroads. The 5th and 14th Amendments of the U.S. Constitution permit the government to exercise its power of eminent domain. All right, next one, 83. At the very minimum, advertising property or services by real estate professionals should include what? A, the license number of the broker, B, the brokerage firm's name, C, the office phone number, or D, the service listed. Ooh, this is a good one. All right, take a couple moments to think about this one. Alrighty, so what is the correct answer? At the very minimum, advertising property or services by real estate professionals should include what? Correct answer is B, the brokerage firm's name. States may require additional information, but federally, at the minimum, all advertising for property must include the broker firm's name. This is for all advertising, social media included. So this is super important to understand. In all of your state portions of the exam, they're going to ask you about these advertising rules, especially what needs to be included. And again, almost always the brokerage firm's name needs to be included. And sometimes, depending on the state, it can be nickname. But if it is a nickname, then it needs to be registered with that state's real estate commission or real estate authority or Department of Commerce, whatever it might be. But almost always, the brokerage firm's name needs to be included. All right, next one, 84. What specific formula would be used to estimate the value of property using the income approach? A, net operating income divided by cap rate equals market value. B, net operating income multiplied by cap rate equals market value. C, cap rate minus net operating income equals market value, or D, cap rate divided by net operating income net operating income equals market value. Woo. I never was good at like math formulas, so saying them also applies. I'm not really great at that, so I apologize if I stumbled a little bit on that one. All right, so take some time and figure out the answer for that one. Alrighty, do you know your formulas? So, what is the correct answer for this one? It's going to be net operating income divided by capitalization rate equals market value. So A is our answer. The income approach is the real estate valuation method that uses the income the property generates to estimate fair value. It's calculated just as we said here. Net operating income divided by capitalization rate equals market value. So you might be thinking, sitting there thinking like, oh, like, do we really need to know this? For my real estate career, and the answer is it depends. More than likely, no. Depending on if you work with commercial, do a lot of commercial real estate, or you're involved with the appraisal process. But the exam likes to quiz you on these types of things. They do. They want you to be aware of how the different appraisal approaches work, which is why we've talked about a couple of them today. And within that, you need to be aware of how the approaches are done and even the math behind it. So again, we do have a crash course on this on the channel. I highly encourage you guys to check it out. If like the appraisal approaches completely confuse you, please check that out, because I go pretty in depth into that. All right, next one, question 85. Steve, a real estate agent of 5 years, was at his local coffee shop with some agents from other offices. The subject of commissions came up, and agents began to compare their commission rates. What should Steve do? A. Excuse himself from the discussion, as this would constitute a violation of the Equal Credit Opportunity Act. B. Excuse himself from the discussion, as this would constitute a violation of the Fair Housing Act. C. Advise the other agents. This would constitute a violation of the Sherman Antitrust Act. Or D. Listen carefully so you can be more competitive in the market. So take a moment to think about Steve and what he should do in the situation. Alrighty, so what should Steve do? So Steve should C. He should advise the other agents this would constitute a violation of the Sherman Antitrust Act. So, listen. The Sherman Antitrust Act prohibits price fixing. Real estate agents and brokers should understand that any discussion about commission could constitute a violation of the laws, even if only implied. So again, this is one of those ones where theoretically, right, you could leave this conversation, but is that the safest thing to do? No, because again, let's say there's a client there and they see that you were standing there and maybe you didn't do anything like that. That could put you at risk. So it's best to advise the other agents, hey, this is not right. That way it's on record that you said something, and that's the safest thing and the most correct thing to do. So that's the answer there. All right, next one, 86. Generally speaking, what happens when the supply of available houses in an area increases significantly? A, the average cost of housing goes down. B, the average cost of housing goes up. C, commission rates are raised. D, commission rates are lowered. So take a moment to think about that one. Alrighty, so this is a pretty simple supply and demand problem. It's asking us when the supply of available houses in an area increases significantly, what happens? Well, the average cost of housing would go down. So remember, if it increases, it goes down. If it decreases, it goes up. So it's the opposite. So our correct answer is A. So again, think of supply and demand like a scale. One side raises, the other will lower, vice versa. Generally speaking, low supply and high demand increase price. In contrast, the greater supply and the lower the demand, the price tends to fall. So in our terms, for real estate, when the supply of available houses in an area increases, the average cost of housing goes down. All right, next one. What is an item on a property that is installed by the tenant and is related to the tenant's business classified as? A, fixtures, B, trade fixtures, C, easements, or D, emblements. So take some time, think about that one. Alrighty, so an item on a property that is installed by the tenant and is related to the tenant's business would be classified as B, trade fixture. So a fixture is any physical property that is permanently attached to the real property. Trade fixtures refer to items installed in connection to the business, such as a stove, refrigerator, in a restaurant. Those would both be considered trade fixtures. All right, next one, 88. What is it called when parties have fully performed the terms of the contract? Is it A, executory, B, executed, C, finalized, or D, closed? So take a moment to think about that one and come with your answer. Alrighty, so what is it called when parties have performed the terms of a contract fully? That would be B, executed, not executory. When contracting parties have signed a contract and both parties have done all they promised to do, it is called an executed contract or executed agreement. All right, next one, 89. A collection of federal and state government laws that regulate the conduct and organization of business corporations, normally to promote fair competition for the benefit of consumers. A, the civil rights and business laws. B, business and ethics laws. C, civil rights laws. Or D, antitrust laws. So take some time, think about that one, come with your answer. Alrighty, so what is the correct answer for 89? It's going to be D. It's the antitrust laws. Antitrust laws are a collection of federal and state government laws that regulate the conduct and organization of business corporations, normally to promote fair competition for the benefit of consumers. In retrospect, antitrust laws protect the consumer and are healthy for a stable economy. It's important to know and understand the ones that deal with real estate as they directly relate how you function as an agent. Alrighty, question number 90. A non-licensed buyer negotiated the purchase of a house. During a conversation with the seller agreed to include both the washer and the dryer in the sale, and this was included in the sales contract. In this situation, if the seller takes the appliances, what recourse, if any, does the buyer have? A, the buyer can declare the principle of performance and trade any assets he has for the assets he wants. B, the buyer has no recourse because he negotiated the sale himself. C, the buyer may sue the seller for specific performance. Or B, the buyer may sell the seller for partial performance. So take some time, think about this one, and come up with your answer. Alrighty, so what's going on here? A non-licensed buyer negotiated the purchase of a house. During a conversation with the seller agreed to include both the washer and the dryer. Essentially, it didn't go through, or I'm sorry, in this situation, the seller takes the appliances. So again, the contracts didn't really go through all the way. What recourse, if any, does the buyer have? Well, correct answer is C. The buyer may sue the seller for specific performance. Specific performance is an equitable remedy in the law of contract, whereby a court issues an order requiring a party to perform a specific act, such as to complete performance of the contract. In our instance, since the since the washer and dryer were included in the contract, the buyer may sue the seller for specific performance. All right, next one. 91. The cost of public services is distributed among real estate owners through what? A, personal property tax, B, real property tax, C, special assessment, or D, sales tax. So take some time, think about this one. Alrighty, so this would be B, real property tax. Public services distributed among real estate owners. That's the key thing there, real estate owners. Now, property tax is an ad valorem tax assessed on real estate by local government and paid by the property owner. Public services for real estate owners are paid by real property tax. Now, again, important distinction there. Basically, because it says real estate owners, we know real property tax. All right, 92. Majority of homes before blank used lead paint. A, 1950, B, 1972, C, 1978, or D, 1993. So take some time, think about that one. Alrighty, you guys should know this one. This is 1978. You should remember that. Remember that year. Because the Residential Lead-Based Painting Reduction Act was established in 1996, and then the law, which agents must be aware of, was made in 1978. So you need to know those two, to 1996 and then 1978. Yes. So that is a correct answer for that one. Let's move on. 93. Altering a written document by improperly signing someone else's name to an instrument is called what? A, forgery, B, usury, C, altercation, or D, puffing. All right, take a moment, think that one over. Alrighty, altering a written document. That is going to be A, forgery. Forgery refers to the false making or material alteration of a legal instrument with the specific intent to defraud someone or anyone. It is illegal and real estate agents must be aware of the action. All right, 94. Appraiser Larry has a set of special purpose and public service buildings like schools, churches, and post offices, which he needs to appraise. Which approach to value would Larry, the appraiser, choose to complete the task? A, cost approach, B, estate approach, C, income approach or summation, or D, market data approach or sales comparison approach. So think about this question and come up with your answer. Alrighty, appraiser Larry, what should he use? He should use A, the cost approach. For special purpose and public service buildings like schools, churches, post offices, the cost approach is the best choice. The reasoning is because these types of buildings usually do not have income, so the income approach is out, and there's not enough comparables to do a sales comparison approach. So the cost approach is the best answer. Next one, 95. After smoking, this is the second leading cause of lung cancer in the United States, a naturally occurring gas that forms in rocks, soil, and water. A, radon, B, chlorine, C, lead paint, D, carbon monoxide. So take a moment to think about that one. Alrighty, so 95. What is the correct answer here? What is the second leading cause of lung cancer in the United States? It's going to be A, radon. So you might be thinking, oh, maybe it's carbon monoxide because there's carbon monoxide in like cigarettes, but no, it is radon. That is the naturally occurring gas that forms in rocks, soil, and water. It's one of those environmental things that we need to be aware of for that section of the exam. All right, next one, 96. Which of the following real estate contract clauses establishes order of priorities of financial claims, in parentheses, liens? A, the release clause, B, the habendum clause, C, acceleration clause, or D, subordination clause. So think that one over. Alrighty, so when we're looking at order of priorities of financial claims, we know it's D, subordination clause. Subordinate. Remember, it's subordinate. Subordination clause in real estate establishes priorities of financial claims. The subordination clause effectively makes the current claim number one to any existing claims that have already been recorded. The way that I was saying earlier, which is how a lot of people remember it, is you think subordination, it's subordinate. It's, it essentially makes the other claim subordinate to itself. It becomes number one. It's a good way to remember it. All right, next one, 97. Commingling is the opposite of what? A, separation, B, contribution, C, combination, or D, transformation. So commingling is the opposite of what? Take some time to think about that one. Alrighty, so what is the opposite of commingling? Well, that is A, separation. Commingling refers to the mixing of brokers' funds with clients' funds. The opposite of commingling is separation, which is just separating the funds. It's worth mentioning commingling can be illegal depending on what state you are in, but it is something that you need to be aware of and know how it works and operates because, again, it can be illegal depending on the state and even if it is legal on the circumstance. So keep that in mind. All right, 98. A parcel of real property that has an easement over another piece of property is best described as A, serving estate, B, dominant estate, C, an estate in sufferance, or D, an estate in tenement. So take some time, think about that one. Alrighty. So a parcel of real property that has an easement over another property or piece of property is best described as what? Well, that's going to be B, an estate, a dominant estate. So by definition, a dominant estate is a parcel of property that has an easement over another piece of property. So remember, guys, if it's dominating, if it's over, so again, it kind of tells us here, an easement over another, it's dominating. It's the big thing. It's going to be the dominant estate, whereas the other one serves. It serves. It's the lesser. It's the servient estate. Alrighty, next one, 99. Find the annual GRM. A 9-unit building in Cleveland, Ohio, with an asking price of $500,000 and gross annual rents of $75,000. A, 5.66, B, 6, C, 666, D, 7.66. So again, 4 numbers there. Quick little math problem to end this for you guys when we do these last 2 questions. But yeah, so think that one over and come up with the answer. Alrighty, so you either know how to do the math or you don't, unfortunately. That's just the way it is with a lot of these math ones on the exam. So hopefully you are aware of it. So what is the correct answer for this one? Well, it's going to be C. It's 6.66. So again, essentially it's property price divided by gross rental income equals rent multiplier. So in our case, we would take that $500,000 and then divide it by 70,000, and that equals 6.66. So it's the math itself is easy. I know a lot of you guys, you get worried about the math problems on the real estate exam. You're concerned, but really, guys, it's the math, the arithmetic is not hard. It's just being aware of the formula, being aware of the term associated to the formula, the terms, how the formula works, how the practice works, things like that. That's more important. So occasionally you're going to see maybe 1 or 2, maybe 3, math problems on the exam. Obviously, it varies depending on the state, and I do have a video on that answering how many questions that you are going to see. But chances are you're probably going to see at least 1 or 2 questions on the exam with math, so just be prepared for that. But again, it's simple math. It's not hard. You just need to be aware of how to do it. Don't be scared. Alrighty. Next one, question 100. Final question. What is the document that defines the relationship between the broker and the seller? A, listing agreement, B, exclusive agency contract, C, purchase contract, or D, disclosure statement. So take some time, think about that one. Alrighty, so question 100, what is the answer? It's going to be A, the listing agreement. So disclosure statements, purchase contracts, and inclusive agency contracts are all legal documents, but it is the listing agreement that clearly defines the relationship between the broker and seller. So you must understand that, and really you should be familiar with all four of these documents and what they do. But obviously, guys, we just scratched the surface. So we did 100 questions, but there's so many more to do, and they're all featured on our website. So if you guys want to head there, realestatelicencewizard.com, check out our free exam. Again, it's completely free. Again, there's tons more questions there. And then, of course, if you want our premium prep packages and stuff like that, we do provide that as well. If you like this video, click here for more real estate exam prep related content. If you want to subscribe, click here. I really appreciate you spending the time with me today. This last year's been pretty crazy, and I know I personally gone through a lot. So here's to a fantastic year. I wish the best for everybody who watched this video. And again, thank you so much for spending some time with me today. I really appreciate it. As always, see you guys next time. Make today magical. Bye-bye.